Okay, so let's continue with the next account from the balance of payments, which is the what I told you that the book says that these accounts are independent, but for the purpose of this course, we're going to mix them, the financial and capital account, both together in the same concept. So the financial and capital account are transactions that are related to investments and financial products. So let me explain. Um, eh, a transaction that will appear here in the financial or capital account are related to things that come from the financial market, that comes from the from making an investment, from things that that are financial products. And if I give you examples, I think it will be clearer. And the concepts that we have inside of the financial and capital accounts are very simple. Mostly, these are the direct investment, the portfolio investment, and we have this other investment, which is basically anything else. But let me explain direct investment and portfolio investment, and I think with that, it will be clearer how it works. So the main difference between direct investment and portfolio investment is that direct investment involves something physical, right? Like um, the best example of direct investment is when a company establishes a factory, they build a factory, they build a branch in another country. Why? Because they are actually investing on a physical space and on a building, something like that. That is a good example of direct investment. So as you see here, it says Ford Motors Company builds a factory in Australia. So that means that an American company is building a factory in another country. So that is a way, a form of direct investment. And if we analyze what's going on with the money is leaving the US, right? Because the American company is sending the money to Australia. So from the American perspective, this transaction, it's debit, it's negative because the money is leaving the country. And for Australia, it will be credit, it will be positive. So direct investment has to do with physical things. Another example that is also important is when, or I think it will help you to understand this better, is not only building entirely the factory or whatever, but also if you buy so many shares of a company that at some point you have control of that, that will be also called direct investment, but only if you have control of that company. For example, there was a point in time, I think I said about I talk about this example in the last weeks when I say that at some point Citibank bought Banamex in Mexico, but so they bought so many shares that they have control of Banamex, so that was that can be categorized as direct investment because Citibank became owners of the physical assets of Banamex, not only the money, not only the shares, not only the bonds, but also the buildings, the headquarters, the branches, the ATMs. They became owners of those physical things. So direct investment is basically um, anything that's related to a physical investment, that is related to a building or to a factory, things like that. And portfolio investment, and I think it will also help you to differentiate between the two of these, are all the financial instruments that help you to make an investment. So it's shares, bonds, bills, derivatives, investing in a fund, anything that is not physical, but it's like paper investment or virtual investment. Currencies too, if you buy currencies just to have currencies, or um, if you buy derivatives of gold or things like that, it's also part of this portfolio investment. So a portfolio, we also have some examples in here. I will read this ones. It says the government of Korea buys US Treasury bills to hold as part of its foreign exchange reserves. So that means that the government of Korea is buying American T bills. So a T bill is mm, a financial instrument that is not a building, right? A T-bill is not a building or something physical in the US. It's only a paper. So that's why we classify it as portfolio investment. And other investment, the book talks about other investment, but from my perspective, everything can fit in here or in here. I don't really find something else that can't be in here because look at this. Here it says, a US firm deposits $1 million in a bank balance in London. I would say this is kind of of a currency investment, right? So I would classify it as portfolio investment. But anyway, the book only says that there are other kind of transactions that are related to financial assets, and they will be part of the financial and capital account. But again, don't worry. Remember, take note of this. I will not ask you for the sub account. I will only ask you for the main account to classify a transaction in terms of it is this financial or capital, or is this current account, or is this, I will explain in a second. So we will do some exercises in a few moments, and I think with that it will be even clearer, right? So I hope this is fine. I hope you are understanding the accounts, and let's move to the next one.